Hello everyone, this is a live Forex YouTube channel here. Today I want to take us on some terminologies that are used in Forex trading. Forex is more like a community of its own, and every community has its peculiarities. Every community have their own language. So today we'll be looking at some Forex terminologies. That is the language of Forex traders. So that when you hear certain words, you will be able to understand their meaning. Before we proceed, if you have not subscribed to my YouTube channel, please do so. Also like and share the video. You can also click the notification bell so that anytime I upload a new video, you'll be notified. Also, if you are interested in using my strategy, you can chat me up on WhatsApp. If you are interested in using the broker that I am using, you go to the description box. You will see a link there. Follow the link. I've already done a video on how to create an account. So with that video, you can create your own account and you link up with the broker that I'm using. They are very reliable and trusted, and they have been in this business for many years, and they are in so many countries. That being said, let us proceed. The first word here is ask. Ask. When we say ask in Forex, we are talking of the ask price. That is the price to describe the amount a trader is willing to buy a particular currency. The price at which a trader is willing to buy a particular currency. That is what we call the ask price. What is the ask price? The price that a trader is willing to accept to buy a particular currency. That is ask price. Then the next is asset. When we talk of asset in Forex, what are we talking about? For assets refers to items of resource, items or resource of value. That is the items that are being traded on the floor of Forex. They are the things we refer to assets, referred to as assets. Some of them include shares, indices, interest rates, commodities, bonds, and so on and so forth. Things like gold, cryptocurrencies, these are assets that are being traded in Forex. So anytime you hear of assets, that is what is being referred to. Then the next is base currency. Base currency. What do we mean when we say base currency? Anytime you are dealing with currency pair, two currencies are usually involved: the base currency and the quote currency. If you look at your screen, you will see an illustration, a diagram where this was explained with the aid of a diagram. For example, you have Euro USD, the currency pair. The Euro, which happens to be written first on the left-hand side, is the base currency, while the USD, which is on the right-hand side, is the quote currency. So that's that with base currency. The next is bear market. Bear market. When we say the market is bear or bearish, what do we mean? The word bear in Forex is used to describe when the price movement is on the decline. When the price movement is on the decline, that is when we say the market is bearish. And you see in the diagram, in the picture, the picture of a bear. It indicates how a bear fights or attacks by bringing its head down. It attacks downwards. That is why we say it's bearish. It is a downward trend in price when the price is on a decline. When the price of an asset is on the decline, the price is going down, we say it is bearish. Then the exact opposite of a bear market is the bull market. You can also see the bull that is written in the diagram. The bull has the green picture. The bear is on red. And if you look at the chart that is also attached, you'll see what we call the candlesticks. One is green in color, one is red in color. That green color is the one we refer to as the bullish candle. The green color is the bullish candle, whereas the red candle is the bearish candle. They all represent price movement of an asset. When the price is going up, you see the candlestick turns green. But when it is going down, when it is down, it will turn red. And remember, the price movement, when it has to do with a bullish market, it starts from up, down, downwards. And when it is going up, when it is bullish, it starts from down, upwards. Just like you see the picture of a bull. There, you see the picture of the bull. The bull brings its head down, and with the horn, it attacks upwards. That is the exact movement of a bullish market. Then the next is bid, bid, the bid price. It is the term that is used to describe the price at which a trader is willing to sell a particular currency. The price at which a trader is willing to sell a particular currency. Remember earlier we talked about the ask price. Ask and bid are more like opposite of each other. The ask price is the price the trader is willing to buy, whereas the bid price is the price the trader is willing to sell. That is what it means in simple terms. The next is buy limit order. A buy limit order is a type of order, a pending order instruction given by a trader to a broker, instructing him to execute a buy position when the market price of an asset reaches a specific price level. That is to say, when the price of the asset falls below a certain level, that a buy order should be executed. For example, if the price of an asset is, let's say, 1,000, a trader might set his buy limit order at 500, so that when the price falls to 500, it will trigger a buy. The aim is that when he buys it at the 500, the price will still rise to 1,000 or anything above 500. At that level, he can now sell and make more profit. Then the next is closed position. When we hear of closed position, what does it mean? It means bringing a transaction to an end. Bringing a transaction to an end. Whether that transaction is on profit or on loss, it doesn't matter. The moment you hear closed position, it means that transaction has been terminated or it has come to an end. The next is closing market rate. When we hear closing market rate, what does it mean? It is the final value that a currency is traded in a given time. That is the final value that a currency is traded in a given time, maybe in a day or in a week. Just the closing market value, the closing price of that asset. That is what is called the market rate. The closing price. That's just it. In simple terms, it's just the closing price. Then the next is currency appreciation. When we hear of currency appreciation, we are simply talking about a rise in value of an asset or currency. That is to say, the currency has increased in, in value or in price. That is what currency appreciation means. Then the next is currency pair. When we hear of currency pair, what are we talking about? It's simply talking about pairing two currencies. Pairing two currencies. For example, we have Euro USD, that is the Euro and the US dollar. Then you have the British pounds and the US dollar. Then you have the US dollar and the Japanese yen, and so on and so forth. So these pairs are bought and sold in pairs like that. That is what we call currency pair. They are paired together. Two currencies being paired together. That is major currencies being paired together. There are also minor currencies. We'll get to see that as we move on. Then the next thing you will also know is daily chart. When you hear of daily chart, it's simply a graph that breaks down the movement of a particular currency or asset that have occurred within a single day. Remember, the name is called daily chart. That is the price movement of an asset in a day. You will see it there. I have put a diagram or a little illustration to explain it better. You see how the candles, you see some up, you see some down, you see some long, you see some short. That is how the chart looks like. It represents the movement of an asset or currency in a day. That's why it's called daily chart. With that, we have come to the end of this video. Please do well to subscribe to my YouTube channel if you have not done so, and also share with your friends. Thank you and remain blessed.